Hey everyone, welcome back to Corporate Decoder. Today, Northeast Community Bancorp Inc. just filed an 8K, and I'm seeing a detail about their annual meeting that is pretty interesting. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its annual stockholder meeting and made some key decisions about its leadership and future plans. This report we are looking at is a Form 8, which companies file to announce major events that shareholders should know about. Think of it like a company's official bulletin board for significant news. The earliest event reported here happened on May 21, 2026, which was the date of their annual stockholder meeting. The company is Northeast Community Bancorp, Incorporated, and they are based in Maryland. They have common stock registered on the NASDAQ Stock Market LLC, traded under the symbol NECB. This tells us they are a publicly traded company. Interestingly, Northeast Community Bancorp Incorporated has elected to be treated as an emerging growth company. This means they can follow fewer regulations, particularly around financial reporting, for a certain period after they go public. One of the key items from their meeting involved the approval of a new equity incentive plan for 2026. Essentially, this is a plan to give their top people stock options or grants. The details of this plan were laid out in their proxy statement, which is a document that explains what shareholders are voting on. This section details what was actually voted on and the results. First, they elected directors. This is pretty standard for an annual meeting. Shareholders vote to approve or withhold their vote for individuals who will serve on the board of directors. The voting tallies here show how many votes were cast for each director and how many were withheld, for example. Lynette Bennett received 8,529,022 votes in favor and 341,140 withheld votes. Jose M. Collazo also had strong support. John F. McKenzie, however, had a significant number of withheld votes, over 2 million. This suggests some shareholders had reservations about his re-election, even though he was still elected. A broker non-vote happens when shares are held by a broker on behalf of a client, and the broker does not receive voting instructions from the client. These votes are not counted for or against the proposal. Next up was the vote on that equity incentive plan we mentioned earlier. This plan was approved by a significant margin with 817774 votes in favor and only 553,081 against. This means the shareholders are okay with the company granting stock options and awards to its executives and employees. Finally, the stockholders ratified the appointment of Cesar Snodgrass, PC, as the company's independent registered public accounting firm. This is the audit firm that will check the company's financial statements. The ratification received overwhelming support, with over 10.8 million votes in favor. This is a routine but important vote for ensuring the integrity of the company's financial reporting. This section simply lists the exhibits filed with the report. The most relevant exhibit here is the cover page interactive data file, which is basically a machine-readable version of the report's cover page, often used for data analysis. And here we have the signatures with Kenneth A. Martinek, the Chairman and Chief Executive Officer, signing off on the report on behalf of Northeast Community Bancorp, Incorporated. Now, looking at Northeast Community Bancorp, Incorporated more broadly, it is a regional bank. Based on its market cap of around $335 million and a P/E ratio of 7.6, it is trading at a relatively modest valuation, suggesting investors aren't paying a huge premium for its earnings. Major institutional investors like BlackRock and Vanguard hold significant stakes, which often indicates a level of institutional confidence. The approval of the equity incentive plan and the election of directors are standard corporate governance activities. The strong vote for approving the incentive plan signals that shareholders are comfortable with management being rewarded based on performance. While the withheld votes for John F. McKenzie are noteworthy, they didn't prevent his election, likely due to the overall positive sentiment towards the board's slate. The risk I am watching is how this compensation plan aligns with future performance and whether the company can continue to grow and justify these awards. What I'm actually looking for is to see how these incentive plans translate into tangible shareholder value in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord for more.